On this episode of The Complete Advisor, we're talking with Carle Atkinson, and we are talking about, today what I would like to talk to you about is life mistakes. And Carle, I'm not looking for life advice for myself, gurus of, don't always tip your waiters and be nice to the little guy. I want to talk about life insurance mistakes that you've seen, because one of the things that, for those folks that don't know, Carle, you do an amazing job with life insurance. You are a top producer when it comes to the life insurance world. And I wanted to talk to you about some of your experience in areas where you see clients that make mistakes. And I wanted to run these by you. I was reading an article and I wanted to run a couple things by you and get your take on them. And one of the things that this article said was that a big mistake that happens, that can be seen with high net worth individuals especially, is mistake number one is running into clients that are overfunding life policies. You ever run into that?
I do, and it's usually from a lack of education, or they met with a bad advisor. And when I meet with clients or prospects, I'm always doing a financial inventory of what they have, and then I go to work and with my team, and we strategize and put their assets, to the best use. But I do see quite a bit of overfunding, but it's usually from a lack of education, and they've read a book, or they've watched David Ramsey or Susie Orman or something like that. They got some bad advice. So
some bad advice. And do you run into a lot of folks that do, when it comes to life insurance, since that try to do it themselves?
Absolutely, yeah. It's still amazing to me that a lot of people still think $100,000 is a lot of money, and like the number one request for life insurance is, let me see what $100,000 looks like. $100,000 is not a lot of money.
Not anymore,
right? And so, but it's still like the number one number for a lot of people, and that's a huge mistake. And or they just want to cover just themselves. They're not really concerned with their spouse.
Yeah.
So we have to think about income replacement. We have to think, about staying in the house and not being forced to sell, stuff like that.
That's fascinating. I usually don't do this, but I have to find this in my notes. I just saw a stat that said that it is, I think it's 43%. I bet this won't startle you at all. 43% of married mothers don't have life insurance at all. Surprise you?
Not really surprised. I run into at least probably every couple of weeks. The husband, he'll have a jumbo term, multiples of 100,000, 500,000, $1 million, and they'll have nothing. And I think that just goes back to a lack of education, and planning.
Yeah.
So, but yeah, the spouse needs life insurance as well. You've seen out there, love insurance. It's love your spouse. Well, provide them with life insurance. But yeah, they're not thinking. Those 43% are not thinking about income replacement and or the money it's going to take to hire somebody to take care of the kids.
Yeah,
right? So
that would take a lot.
Right.
That would take a lot. This article mentions another thing that I thought was interesting, especially with high net worth individuals or people that have had insurance, is having old whole life and not maximizing that with maybe doing a 1035 exchange into something else to get that money out of there. Do you ever run into that?
A little bit. Not a whole lot, but the whole life, that is the most expensive form of life insurance.
Do you see much of it?
I don't. I know it's out there, but I don't see very much. I don't run into very much whole life, but with it being the most expensive form of life insurance, there are many, many ways that you could 1035 into like a index universal life, which is cheaper, and the cash value is going to increase, faster because the mortality and expense charges are of course lower. But that's always a conversation. When I do run into it, I'm having that conversation that yeah, I mean, we can go into an IUL. That'll put you in a better position. But also look at the age of the policy as well, but how long they've had it. But yeah.
Yeah. We so one of the things that we just mentioned there was, the IULs. The other thing that this article mentioned was a big mistake is running into a lot of folks that are underfunding their policies. Do you see that?
I do, and I see that like on even in permanent life insurance. I see if they're doing like a minimum face amount, they're trying to increase the cash value, at a faster clip. But yeah, I mean, you do want to look at maybe in-force illustrations, running those, and making sure the policy's not going to lapse. But I do see the underfunding of policies a decent amount.
So a million years ago, I was in the life insurance world, and one of the challenges that we would run into is there were people that were selling the vanishing premium concept and the dividend paying, and they were way too aggressive on what they were illustrating. And this literally was a different century, but I'm not as versed in the life side. Do you still run into that? Does that still happen out there today?
Absolutely, yeah. I mean, I've been in the business for nearly 20 years, and before AG 49 came, and now we have the second iteration of that. I look back at the policies that I wrote back in 2012, 2013, and they're not performing as the illustration showed that they would. And so I do think legislation like AG 49 was a necessity. It was paramount that it be put in place because these policies, and of course these clients are looking at their policies and potentially going back and looking at their illustrations and having questions like, hey, why is it not doing what you said it was going to do? So you say centuries, I mean, I'm going back a decade and it's not. So I do run into this quite a bit, and so yeah.
So what do you do with that when you have that conversation with a client? I know that you have to, on one hand, especially if it's not something you sold. How do you walk a client through that? Because there's got to be it's almost like the 5 stages of grief. There's probably like a little anger that somebody sold me this and showed it, and it's not performing. And what do I have? And then what do I do? How do you walk them through that?
Well, that client kind of their first thing is going to look at the agent.
Yeah,
and I understand that, but. I think it was just the time we were in at that time. It's just the way things were.
That's a very good point.
So I mean, not saying that there's bad agents out there, but I just think it was the time that we were in. That I look at my own policies. I look at policies that I illustrated, and they haven't performed. Of course, I'm overfunding those, but. They're not performing as well as I thought they would be.
And that's where I think a lot of people probably have that issue with that underfunding of they assumed things were going to perform better than they were, so they fed it less, and now it's starving itself slowly to death.
That's a great point. Yeah. So they thought that the double-digit returns, but then those didn't happen. For whatever reason, and then yes, great point.
So when it comes to that article had those 3 things, but I was also reading something else about client misconceptions. And with your experience, I'm curious to pick your brain. What do you think are maybe a couple of the biggest misconceptions you run into with clients when talking about life insurance?
They believe that their insurance that they have from their job is going to stand the test of time. They think it's going to last forever. And, term, is going to eventually terminate one day, the term life. Whether it be a 20 or a 30-year term, whether it be the term of your employment, it's going to go away. And a lot of people don't realize that term at work is usually built on a 5-year chassis. So every 5 years, when you turn a 5 or a 0, it's going to go up in cost. And so that insurance is only used, really, it needs to be supplemental, not your go-to policy. So that's a huge misconception. Another misconception is when it comes to the beneficiaries.
Yeah.
They believe, oh well, I have a will, and that will take care of everything. That's not the case. If in your will you have John Doe as receiving the proceeds from the death benefit, but with the insurance company on their record, you have Jane Smith. Mm-hmm. Jane Smith is getting the money. It doesn't matter what's in your will. Okay, so people, they think that a will is ironclad.
Yep.
And so that is a huge misconception.
That is, we had a client, this was years and years ago, where the mom had told, there's two kids, and the mom told the kids that, you'll get this and you'll get that, and she hadn't gotten around to changing the beneficiaries. And once the one child got those funds, all hell broke loose. And if the kid gives the money over, at that point it's a taxable event to that kid. I'm giving you all this money. Messy. And that, client beneficiaries doing a check. Some people think that that's a small thing, but making sure beneficiaries are correct, that is huge, right?
I've always done that. And then that just, usually breeds other, conversations about, maybe another, opportunity to protect, that family. But I had a client a couple of years ago. He was like, okay, I have two sons. His wife had long passed away. And he goes, I have $1 million. And so I'm going to leave son Matt, I'm going to leave him $500,000 of my life insurance policy.
Yeah.
I'll leave, John, I'll leave him my $500,000 IRA. So they're going to get the same amount. I'm like, you think they're going to get the same amount? He goes, yeah, $500,000 here, $500,000 over here. I said, they're not getting the same amount. The life insurance of $500,000 will be $500,000. Uh-huh. I said the IRA $500,000 will be subject to taxes and fees, and so John is not getting the full $500,000. So there was an educational process that had to take place and so then he made a change,
Yeah.
But that's misconceptions on taxation.
That's got to be a huge one where people are missing the biggest opportunity probably of any financial vehicle is what happens with that beneficiary and receiving those funds. I mean, that's just dramatic.
America has billions and billions in tax deferred accounts, and taxes will be coming due, and they just don't think of taxation and what it's going to do to their IRA, and then. But yeah, that's a story from a couple years ago.
So so let me ask you this. That makes up an interesting thought here. So you specialize in working with high net individuals, but you also still service and work with regular folk, if you will. Do you see a difference in understanding the advantages of life insurance, high net worth versus regular folk?
Absolutely, yeah. I mean, the regular, clients. I mean, they just, they're still working, and they have that life insurance at work, and then of course that, that's the conversation about, why you need a separate policy. The people, the more high net worth individuals, they get it. They get it on the life insurance, but I have found out they don't get it on the taxes.
Really?
Yes, absolutely. Yeah. So I'm working on a case now that he's a friend, got from pickleball playing pickleball, and he just had no clue that life insurance could be used not just to protect his family, but it could be used as a vehicle for tax efficiency. Yeah. And so I have found that tax efficiency is just really across the board, no matter if it's a regular client or a high net worth client. But on the life insurance, they think it's just really protection, But yeah.
You ever worry that since Uncle Sam is always there's a lot of things we have to pay for, and the tax efficiency of life insurance. You ever worry that they're going to gaze their eye over, like in Lord of the Rings, and look over at life insurance and the benefits and say, hey, wait a second?
I've long thought that it's too good to be true. I mean, the time we're in as far as tax efficiency of life insurance, and I've kind of wondered myself. I'm like, why don't they take a longer look?
Knock on wood.
So I have long thought that.
Do you find in working with high net individuals that as soon as you put that educational part out there of that efficiency, they grasp it faster, or they see the advantage because they have high net worth?
Yeah, they definitely see the advantage. Because of maybe how much they paid in taxes, just a few months back. So I get that. When I'm working with high net individuals. They know the power of saving in taxes, and of course the conversation now is taxes are on sale until December 31st, 2025.
That's right.
And so we're having that conversation, and of course structuring a life policy where you can maybe do a conversion from an IRA over a 4 or 5 6 year stretch, depending on the amount of money. And so that's what I'm doing with this with this client now, who's just has had a light bulb go off. Oh wow, I can save a lot of money if I act now. So
it is it's unfortunate that that's sunsetting, but at the same time, from a sales perspective, it does help kind of put the spurs to people. If you can get them to see the light and say, hey, we have a limited time. This is a limited time offer, but it's not me saying it. It's Uncle Sam that's putting this out there.
Right. Yeah. I mean, I don't know. I mean, there's talk of what may happen after, January 1st of 26, but there's no guarantee if it's going to be, extended. So, but yeah, that's definitely the conversation we're having.
If I was going to put my Punxsutawney Phil hat on and, Groundhog's Day here, I'm sure that of course, I'm not a politician, but there's probably no way they'll extend it because they'll want to put their own name on it, because that's like the last guy's policy, and I don't want to extend the last whatever the administration was. I want to get credit for my new plan.
That's definitely fair, but yeah, I think in some form it'll continue in some way.
Yeah.
But yeah, they'll have a different name on it
It'll
for
be,
sure.
The beauty of it is, we can't on some of the things we can't control the outcome. We can't control what necessarily they do in Washington, but we can pivot and make the best advice, give the best advice for our clients, which is always opportunity for us.
Absolutely, yeah. And it's just, I try to educate, the current events and where we're headed when I meet with clients and prospects, and they're appreciative because I don't believe they're getting, that insight, from anyone else, so.
So with life insurance, I got 2 last questions for you. So with life insurance, what do you see as maybe your biggest challenge in the next couple of years as it relates to your business and life insurance?
I think it's consumer behavior, procrastination. That's even still, when I'm working like with high net worth clients, they do get it, but they feel as if, I can take care of it. I'll get around to it next month, 3 months, 6 months down the road. So consumer behavior, skepticism, prospecting. But yeah, I think that is probably the most challenging hurdle in the years to come.
So then the flip of that question, when you look over the next couple of years at your business, at life insurance, at the marketplace, what excites you the most?
The opportunity to educate and be there and be the go-to person in my area, and whether it be asset preservation, tax retirement, legacy planning, just being there as a resource, and I'm excited for that, and that's why I got into the business many years ago, is to help people, and that's my calling, and so that's what I'm excited about.
Nice. Well, I look forward to having you back on Talk Life Insurance. Maybe we'll, as we get closer to the sunsetting of some of those provisions, I'm curious to check in with you and see how that's affecting business and how you're pivoting with it. But for everybody else, I got to do my show spiel here, Carl. So for everybody else, thank you for being here. And I have a favor to ask of you, and that is this. go ahead and hit the subscribe. Or if you're on Apple, my wife and I were talking about this last night. I said, honey, have you subscribed to the podcast? She's like, I don't know how to. And I said, well, on Apple, just look, you hit subscribe. There's not a subscribe button on Apple. You actually follow, which, so if you're out there, hit the follow button, depending on where you're finding us. But if you do, what ends up happening is as soon as we drop a new episode, you're immediately notified. So that being said, we'll see you on the next episode. Carl, thanks for being here, man.
I enjoyed it. Thank you for having me.